On the 10th of March 2022, one of the biggest banks in America, the Silicon Valley Bank, was shut down. Before we get into the collapse, firstly you must know what the Silicon Valley Bank is. The Silicon Valley Bank was founded by Bill Biggerstaff and Robert Medeiros, along with the bank's CEO Robert Smith. The bank offered business banking services to companies at various stages of development, but it had a notable reputation for serving startups and firms backed by venture capital. The bank became well known amongst companies at the start-up stage and grew quick with large investors such as BlackRock, J.P. Morgan and the Vanguard Group. Well, what happened? The Silicon Valley Bank experienced substantial expansion between 2019 and 2022, during the pandemic and Russian war. This led to a considerable increase in its deposits and assets. Although a small percentage of these deposits were kept in cash, the majority of the surplus was invested in long-term debts, such as treasury bonds. Because of this growth, the Silicon Valley Bank became the 16th largest bank in America and had assets of around $209 billion. Whilst everything may have seemed great due to the pandemic and the Russia war, inflation spiraled up drastically, from it being 2.5% in January 2020 to 9.1% in July 2022. When inflation increases that much, that fast, interest rates will also rise drastically. And that is what happened. The Federal Reserve increased the interest rates. This made the investments much more risky and a large decline in value. To top this off, due to the pandemic, many customers needed to withdraw money from their accounts. In order to facilitate these large withdrawals, the bank was forced to sell a few of their investments at a $1.8 billion loss. This started the downfall of the Silicon Valley Bank. As every day passed, more and more customers applied to withdraw from their accounts. This led to a huge crash in stock price of the Silicon Valley Bank and a few other banks on the 9th of March. And after a few days, it became too much, leading the SVB Financial Group to file for bankruptcy. This was the largest bank to have failed since the 2008 financial crisis, and the second largest bank failure in the history of U.S. Now that you understand the fall of the bank, how did this affect the people? Well, it affected them massively. A lot of people lost so much in the collapse of this bank, and here's why. The FDIC provides insurance coverage for bank deposits up to $250,000 per depositor per bank, for each account category. However, for accounts in Silicon Valley Bank with deposits exceeding $250,000, the majority of the funds would be uninsured. Therefore, in the event of a bank failure, account holders would typically not receive any compensation for the money that exceeds the insurance limit. For example, let's say you have $250,000 in the bank. In an event like what happened, you are insured for all your $250,000 back. However, if you had, let's say $10 million, you would still only be insured to get $250,000 back. That means that the $9,750,000 is not covered and is taken from you. And that is what happened to many companies and people. This is a scary concept, as it shows how easy it is for people to lose what they have worked for and how unsafe their system is. The failure of the bank and the realization that many depositors would not be fully compensated for their losses has added to the already existing concerns about an economic downturn and recession. But this begs the question, what will happen next? And could this happen to you as well? And that's a wrap for today's video. Don't forget to hit the like button and subscribe to our channel for more educational videos like this one.